Hi guys, Zaheer Anwari here on behalf of the dynamictrader.com. Can I get a quick confirmation that you guys can hear me okay and that you can see my screen as well? Yeah, brilliant. Brilliant. Thank you, administrator. Okay, before we get into the main scope, I'd just like to direct you guys to the apprentice training. So if you go to the browser, go.thedynamictrader.com/trade the trends. I will send this across in the chat box. If you want to check out the apprentice training that we have going on, then please check out the following link. I'll just put it in the chat message right there. Now, the apprentice training is really to guide people into trend trading. You know, there's a lot of information out there on day trading and shorter term trading, and through these webinars that I do with FX Street, you know, what people should be realizing is that that's not necessarily the best way forward for private traders. Most private traders either have a job or working, you know, a full-time job, 9 to 5. They don't have funds off a bank. You know, if you've got the funds of a bank, then day trading can work. But, you know, when you've got 10, 15, 20,000 pounds, you know, when you've got regions like that where you're starting with, then you need to have a different approach. Day trading is not necessarily the best approach. The reason why people go down the day trading route is because there's a lot of information out there, and it's natural to go down that route. There's very, very little information out there on trend trading, and you know, you have to question that. You know, usually something that is far more beneficial and far more powerful is usually repressed, and something which is less favorable to you but more favorable to the seller is usually promoted out there. And you have to question these things. And the statistics are very real, guys. Only 5% ever succeed in trading. So we need to look at that and understand why, and why is everyone else, you know, why is everyone else falling short? And ultimately, trading is not difficult. It's a very simple art to master, but it requires a particular route. So if you go onto the webpage, it will tell you what's included. So, you know, part of community of traders, 24 hours, I will give you a trend trading strategy, risk management, compounding, stock management, exit management is all explained, a trading plan, you know, how will you adapt this around your lifestyle, and of course some of the tools that we have here at the Dynamic Trader. I'm going to share some of these tools with you in the presentation potentially. So have a look at the page, guys, and if you have any questions, please of course contact me after the webinar. Okay, let's move straight into the presentation for today. So I'm just going to bring up my e-signal. Okay, I'm sharing it, so administrator, can you see my e-signal charting package, please? Excuse me, guys. I've got a bit of a dry throat today, so please bear with me. Administrator, can you see the? Can you see my, or anyone out there? Can you see my e-signal charting package? Can I get a heads up? Yeah, okay. I think we're good, guys. All right. I don't think anyone is coming through on this, but okay. Okay, well, let's continue. And if there are any issues, then just let me know. Okay. So what you can see in front of you is my chart is blurred. I'm not quite sure. Let me try that again. Chart is blurred. Okay, let's go through that. I'm going to stop sharing. All right, and I'm going to share it again. Okay, Ray, can you let me know if that is clearer, please? Yep, okay. Jake, yes, okay, fantastic. Okay. All right, so what you can see in front of you is a typical chart setup of mine. So on the left-hand side is the watch list. And you can see it's a very extensive watch list. So you've got the Aussie dollar, US dollar at the top, and it goes all the way down to the South African rand, Japanese yen at the bottom. So it's a very extensive watch list. The 3 time frames I'm looking at is the monthly, the weekly, and the daily time frame. So you can see that as a long-term trend trader, I'm looking at the bigger picture. I've got support and resistance levels on the monthly time frame. So here is a proprietary tool that automatically highlights the major pivot support levels that I look at, the green and the red tool. And then I have these pink line levels, which represent the high, the low, and the closing price of 2015. These levels are very significant because I really want to be seeing price trading above or below these levels. So if it's above the high, it's a bull market. If it's below the low, it's a bear market. If it's trading between the pink lines, then generally it's a consolidation. The two time frames below, the weekly and the daily, they both have the 200 moving average, which is the black line, and the 50 moving average, which is the blue line. You can use whichever moving average you want to use, but moving averages are very, very good indicators. You want to use one slow moving average, and you want to use a fast moving average. So whether that is the 200, the 50, or the 50 and the 20, or the 100 and the 50, it really is up to you. I personally like to use the 200 because it gives us a very clear indication of the long-term trend, and I use the 50 to give me the medium to long-term trend. So the two moving averages together are very, very powerful. What I want to see is price trading below both moving averages in a bear market on the weekly and the daily, and I want to see price trading above both moving averages in a bull market on both the weekly and the daily. In addition, I want to see some kind of angle. So I want to see in a bear market, I want to see the 200 moving average heading down. I want to see the 50 moving average heading down. If you look at the daily, it's just moving sideways. The 200 moving average has an angle to it, but the 50 moving average is just really moving sideways. And that makes sense because price is just going sideways. It's in a long-term consolidation. It's in consolidation since September of last year. It is in a long-term bearish trend, and you can see that because it's trading below the 200 moving average. But the 50 moving average is not adding further confidence. It's just saying that price is range bound. So what we need to see is a breakout, and we want to see price break this low point here. If it breaks this low point, then we should see a continuation of the trend. And that is what you want to do. If it breaks to the upside, then we're in a trend reversal. If it breaks to the downside, then we're in a continuation. And remember the expression, guys, the trend is your friend. And that is the direction you always want to go in. You don't want to predict reversals. All too often, people predict reversals and they get it very, very wrong. If you look at price action on the monthly, it's just trading between those pink lines. So the Aussie dollar, US dollar is not one that is looking particularly attractive. However, let's go through some of the currencies that are looking slightly more attractive. Let's start with the CAD Japanese yen. Okay, so if we start with the CAD Japanese yen, we can see that there's momentum to the downside. And you can see that it's trading below the pink lines. There are your pink line levels. It's trading below the low of last year. So we're in a bearish market. And you can see the movement to the downside. The whole move to the downside, then reversal in January, that's already been forgotten about because we're seeing further weakness to the downside. The round number 80 is acting as a support level. So we need to see this level cleared. We need to see the low of January cleared. If this level's cleared, then we can see price move towards 70, the next round number. And you can see that 70 is a support level based on 2009 pivot and also 2011 pivot. So there are two pivot support levels there. If we look at the weekly, we can see that price is trading below the 200 and below the 50. The 50 is now starting to cross below the 200 potentially. That will add further confidence that we are in a bear market. Good weakness to the downside so far in the last 3 weeks. Daily time frame, trading below the 200, trading below the 50. You can see how the 50 acts as resistance in a bear trend. Very good level of resistance. Price pulled back to it. We had a spinning top, and we then had weakness to the downside. Price has come back up again, acting as a level of resistance effectively, and we're now seeing movement back to the downside. We want to see this support level cleared. So if you're not in this, you want to stand aside until price clears this level. And this is that element of trading that people find very, very difficult. It's that element of patience. I've repeatedly talked about it, how patience is very, very important. Okay, so I'm just looking at the questions. It says it may be the system. Ray, I think the issue is probably at your end, unfortunately. So I hope you've managed to get that resolved. Okay, so once price clears this level, this is when we can look for shorting opportunities. So CAD Japanese yen, definitely one for the watch list. Let's go to the euro yen, another currency that. So what you'll realize is that I'm focusing quite heavily on the yen currencies and also some of the pound currencies as well. So if we look at the euro yen, momentum to the downside. There was a support level here, which is now, you can see that price has gone through it. So that now is acting as resistance. Of course, we want to see price close at this level. We may see a reversal to the upside at some point in the last few weeks, in the ending week of February. We could see a reversal to the upside and price close above this, in which case it will still be support. But currently, it's acting as resistance. So now we want to see momentum to 120, 120 being the round number. If it clears 120, then potentially we could see weakness all the way down to 100 being the figure. So those are the levels that I want to see price move towards. If it clears 120, then 110, and then 100. So potential move of around 2,000 pips. On the weekly, you can see that price is now trading below the weekly 200. So we have a bearish bias. We're below the 50. So we're below both moving averages. When price continues to weaken, then the 50 will start crossing below the 200. But we don't necessarily need to have that as a criteria, because by the time that happens on the weekly time frame, you may have missed the trend. Remember, the weekly time frame is a much slower moving time frame. So in an ideal scenario, yes, we want the 50 below the 200, but I don't necessarily need to have that every time, just because I know that price is more important than the moving averages. Moving averages are lagging indicators. I just use them for confirmation. My analysis and my criteria to take trades is all done on price action itself predominantly. Okay, on the daily time frame, price is trading below the 200 and below the 50. So if I open up the daily time frame, we can see now that we're seeing good movement to the downside. Look how quickly price is moving. Remember, guys, the longer the consolidation, the bigger the breakout. And if we look at the monthly chart, this actually has been in consolidation for quite a long time. It's been quite messy. I would say it's been in consolidation since 2013. There's consolidation. Okay, we had a move to the downside, but another area of consolidation. So really and truly a pretty long area of consolidation. The longer the consolidation, the bigger the breakout. And we could see what took, if you look at the low point here, this is 2012 to the high point, which is 2014. So you're looking at 2 years. We may see that same move to the downside in less time, because look at the size of the bars at the moment. So if you look at this period here, big green bars, well, in that same period, we could see big red bars. Remember, technical analysis is looking at the history to determine what could happen in the future. It's not guaranteed, but patterns repeat. We know that. So the euro yen, definitely one for the watch list, but I will look to trade it once it clears 120. So a little bit of patience for now. Once it clears 120, then we can look to trade this. Okay, let's move to the pound dollar. All right, pound dollar, open up the monthly time frame. We can see that we had this big drop in 2008. And since then, it's been in this pretty wide area of consolidation. I mean, the high of it, the consolidation's around 1.7. The low of the consolidation is around 1.4. So you're looking at around 3,000 pips. So within consolidation, there will be trends. And, I'm talking about wide consolidation. If the consolidation is only 1,000 pips, if you look at this area of consolidation here, this is not really an area of consolidation that I would be interested in trading, just because the range of that consolidation is not significant. However, the range of this consolidation is significant. The last time I traded it was when price fell here. And I made a little bit of profit on here, which was, which it can be made in certain levels of consolidation. And we had a bounce to the upside. And now look what's happened. Price has continued to the downside. Anyone who went long off this level of support, that trade would have been short-lived. You don't want to predict reversals. You want to go in the direction of the trend. What this requires is just patience. So we're now seeing price clearing support levels. It cleared this support level. It's cleared this support level. It's now trading below 1.4, being a round number. And there is another support level here, which is around 1.35. If it clears this support level, then we could see price move all the way down to 1.1, even the figure 1. And this is going back to lows of 1985. It's possible. You know, you may hear things in the news that the pound will never get that low. You know, the market does what the market does. Ignore the news and let the charts do the talking. If price doesn't break through this level and we see a bounce to the upside, then let price dictate that. But for now, our bias is in the direction of the trend. On the weekly time frame, you can see that we're seeing good weakness to the downside. Now look at the moving averages. The 50 is below the 200, so that's looking interesting. Both are resistance. And on the daily, the 50 is also below the 200. So we have really good alignment on the weekly and the daily time frame. We are seeing good weakness to the downside. We are trading below the low of the previous year. So looking at the pink lines on the monthly, price is trading below those levels. So we could potentially see further weakness. Now, if you want to trade this, be smart with how you trade this, because there is support here very clearly at 1.35. So if you take any short entries, make sure that you remove the risk when price gets to this level. And we can see that price does bounce at levels of support and resistance with a significant bounce to the upside. Price bounced to the upside here as well. To see that, we have to go to the daily time frame. So look at the bounce, a pretty significant bounce to the upside at that support level. So we could see another bounce like this at 1.35. So is it worth taking the trade? Well, that really depends on the style of trader you are. Just make sure there's no risk on the table. I'm just going to go to the questions. On the small chart screen is clear. Only when I increase the size blurred. Thanks. All right. Okay. Hi. Does the 200 moving? Okay. I'm just going through the questions, guys. Hi, my heads. Hi. Does the 200 moving average on a weekly chart mean 200 weeks price is in average and so on for monthly and daily? Yeah. The 200 moving average basically is a smoothening of price action. So it will give you, there is a mathematical formula based on standard deviations. It's quite a complicated mathematical formula. And it takes the closing price of each bar, puts it into that mathematical formula, and that's what creates the moving average. And it basically smoothens out price action over the last 200 bars, depending on which time frame you look at. If you notice, I don't look at moving averages on the monthly time frame. It's just way too slow moving. I'm not interested in moving averages on the monthly, only support and resistance. It's the weekly and the daily where I use my moving averages. Okay, I hope that answers your question. If you notice, if you look at price action, you have moves and then you have these like pretty deep pullbacks. But if you look at the moving average itself, it's pretty smooth. And so that is the advantage of moving averages. They smoothen out price action and they tell you whether price is in a trend, if it's moving down, in a bear trend, in a bull trend, if it's moving up. And if the moving averages are flat, then we're generally in a consolidation. So there's a lot of information that can be gained from moving averages. Okay, the next currency we'll look at, let's have a look at some of these pound currencies. So let's have a look at the pound Aussie dollar. We're seeing weakness to the downside. However, price is faced with immediate resistance here, immediate support, and also 1.90. So we've got support and 1.90 support. So we've got two support levels. So we want to see price clear that level. We do also have the pink line low of 2015, which is acting as support. So, you know, the smart choice really is to wait for these levels to be cleared and then take a short entry below the low of last year. If you decide to trade it within this level, make sure you reduce your risk. So if you normally risk 2% to trade, reduce your risk to 1% or 0.5%. Be smart with your risk because there's a support level here. Price could come here and bounce up. If it clears it, there's a support level at 1.9, in which case it may bounce up. If it clears that, then there's a pink line low, in which case it may bounce up. So you've got 3 support levels, significant support levels where price may bounce up. Of course, price then may just continue, in which case, if it does continue, you then use a small risk. If it does bounce and stop you out, your losses are small. Trading is all about weighing up your risk to reward. Okay, and trying to figure out where you have a good chance of meeting your targets and how much you want to risk within that. If we look at the weekly, we're above the 200, but we're below the 50. And for me, that's a good enough reason not to take the trade. So I would like to see the 200 moving average cleared as well, weekly 200. On the daily, we can see that the 50 is below the 200. Price is trading below the 50 and the 200. So these are both resistance levels. However, the weekly 200 is support. The weekly 50 is resistance. So this is stuck within support and resistance. So for that reason, this is not a favorable trade. Okay, let's go to the pound Canadian dollar. If we look at the pound Canadian dollar, very similar to the pound Aussie dollar, we are seeing weakness to the downside. However, we've got 1.90 acting as support. We've got this pivot support, and then we've got the pink line low. So there are support levels ahead. Again, if you decide to trade this, adjust your risk accordingly. If you look at the weekly, again, just like the pound Canadian dollar, below the 50, above the 200. This is not a good scenario. We want to see price also below the 200. On the daily, we're below the 200 and we're below the 50. So that's not looking too bad. We do want to see these moving averages cross over on the daily time frame. This is more significant on the daily time frame than on the weekly time frame. So I would like to see the 50 cross below the daily, just to give that added confidence that we are in a bear trend. So pound Aussie dollar, pound Canadian dollar, although they are showing weakness, not looking great in terms of a trading opportunity. However, if you look at the pound Japanese yen, now the pound Japanese yen, I'm short on this, and I think I'm now my position, which was triggered yesterday, is over 250 pips in profit. So look at the weakness to the downside. It's trading below 160. We'd like to see it move towards 150, 140, 130, 120. Those are the levels. And if you look at that consolidation beforehand, again, pretty long consolidation. The longer the consolidation, the bigger the breakout. That is the philosophy we want to go with. If we look at the weekly, price is trading below the weekly 200. So we have that bearish bias according to the weekly. 50, we're also trading below it. So both of these are acting as resistance, which is what we want. Daily, below both moving averages. So the 200 is resistance, the 50 is resistance. In addition, the 50 is trading below the 200. So this chart, at the time of taking the trade, was a very good setup. And if I open up the daily chart, I took the trade based on this bar here. I got triggered somewhere around this level, 159, somewhere around that level. And price has now continued to move in my favor. One thing to note is I do not have a risk to reward ratio. I still haven't figured out how to write on the screen. There must be a way of writing on the screen. I will speak to the administrator after. Maybe there is a toolbox or something that I need to install. Okay. But ultimately, I do not work on a risk to reward ratio. A lot of the times traders have maybe a 1-to-1 or a 1-to-2. So let's say, for example, if they're risking 100 pips, then their reward will be 100 pips or 200 pips or 300 pips. They have some kind of risk to reward ratio. I don't have a risk to reward ratio in the sense that I do not take profit. When my first position is in a winning trade, I then compound and I start adding further positions. So now that my first position is 250 pips in profit, I'm now waiting for the next entry point to compound further. And this could be a breakout, it could be a pullback. I could go down to a lower time frame maybe to find an entry point. There's various ways of entering into the market. But ultimately, what you need to know is that I do not take profit. People always take profit because there's that natural instinct in humans that when you make money, to bank it, and when you're in a losing trade, hold it, because you close it out of fear of losing money, and you hold on in the hope of making your losses back. You need to reverse that logic, and you want to cut your losing trades short, and you want to let your winners run. Day traders today are generally doing everything. Day traders are doing everything which is very different to the underlying philosophy of trading. For example, the trend is your friend. You always want to go in the direction of the trend. Yet, a lot of the time, traders are trying to pick tops and bottoms. So the trend is your friend, but as soon as they find a bottom, they try and go in the opposite direction, when you want to be going in the direction of the established trend. That is, one mistake that a lot of traders do. Another mistake is that they cap their returns, but their losses are uncapped. You want to reverse that. You want to cap your losses and you want to uncap your returns. My risk to reward is 1 to infinity. Not 1 to 1, not 1 to 2, it's 1 to infinity, because I don't know when this trend is going to end. And I'm going to keep on going in that direction until the trend ends, and I'll keep on compounding strategically. So a move of 2,000, 3,000 pips can easily equate to 10, 15, 20,000 pips through compounding, and very good compounded growth in terms of percentages. Okay, so the pound Japanese yen, this is continuing, and at the next entry point, which whatever price dictates, I will look to take a short entry, another short entry. Okay, so that's the pound Japanese yen, and let's have a look at the US dollar Japanese yen. Okay, US dollar Japanese yen, again, if you look at the monthly time frame, just open up the charts, you can see we're trading below the low of last year, so we're having good weakness to the downside. Price is faced with 110 support. If it clears that, then we could see price move to 100. If it clears that, then we could see price go all the way down to this level here, which is 76, which is the low of 2011, 2012. Okay, weekly, we're trading below the 50, but above the 200. Again, remember, that's not a good scenario. So the ideal scenario now is to wait for 100 to be cleared. When 100 is cleared, then we can look for shorting opportunity. Why 100? Because by then it will be below the 200 as well. If we look at the daily, the 50 is below the 200. Good weakness to the downside, good weakness in the last few days. So momentum is very much with the bears, but wait for that entry point, not in a rush to get in. The thing that a lot of traders kind of, in a way, they don't fully appreciate is that you don't need a whole section of the trend. So if we look at this area here, for example, if we just open up this chart, you've got a trend, consolidation, and then a trend. You don't need to have the whole section of the trend. What you want is the middle portion there, then you get stopped out, then you want the middle portion there, then you get stopped out. The middle portion can grow your account by 20, 30, 40, 50%. If you know how to hold and how to compound, a single trend can return you very, very good profit. You have to question how people like Warren Buffett have made so much money. And don't compare what Warren Buffett has now to what you have now. Compare what you have now to what Warren Buffett started with when he started investing. When he started investing, he wasn't a multi-millionaire. He was just a very savvy individual who knew how to make good investments. And that's how his growth has compounded over the years. A lot of the times I speak to people about Warren Buffett and I say, look, he's a good example of someone who's utilized compound growth. And they instantly go, yeah, well, he's a billionaire. He's a billionaire now. He wasn't a billionaire when he was 16. Okay, so you guys need to be, really sort of appreciate what compound growth can do for you. And the other thing to remember, and I'm sure a lot of you guys have heard this statistic, that Warren Buffett made 99% of his wealth after he turned 50. So before he turned 50, he only had $300 million. Now he has $80 billion. Okay, I only say 300 million, it's a large amount, but comparatively speaking, 300 million to 80 billion is a significant amount of money, significant growth. And that cannot happen with a single investment. That's where compound growth comes in. Okay, let me just go to the questions. I'm just making sure that I'm looking at all the questions. It's probably the bandwidth. Okay, I see what you're talking about. Yes, unfortunately, you are probably right. It's probably your internet connection. On what time frame are you finding your entry, Felix? Yeah, really good question. I make sure that my stops and my entries and my exiting and my trailing stop losses, everything is done on the daily time frame. Okay. Another good question: while entering on a daily time frame, do the stops need to be wider? Your stops need to be wider anyway. Generally, your stop needs to be wide anyway. That goes without saying. If you think about it, right? If you look at something like the average true range, the average true range of a currency is maybe 90, 100, 150 pips in a day. If you have a stop loss of 10, 20, 30 pips, you carry a very high chance of being stopped out. So you need to look at things like ATR and use that to calculate your stop losses. The turtle traders, if you don't know who the turtle traders are, then you need to know who the turtle traders are, and make sure you read Way of the Turtle. I'll just write this in the book, the textbook. Way of the Turtle by Curtis Faith. Okay? If you have not read this book, then you need to read this book. This is a true story of how Richard Dennis trained a group of amateurs to become very significant or very prolific traders, and they turned over almost $200 million in 4 years. So, and these guys were technical traders, and they were long-term trend traders, and they were famous for having a table tennis table in their office, because when there was consolidation, they used to pull no trades. So they used to have a table tennis table in their office so that they could play table tennis. So you have to look at these guys and say, well, if that's how they did it, then that's the route that I need to be going down. And that's how I trade. It's exactly how I trade. Very much a modern day turtle trader. Take only a few trades a year and compound into your positions, rather than take multiple trades in a day. Some you win, some you lose. At the end of it, there's not much money for all the effort and time that you put in. Okay. Let's go. That's the dollar yen. Okay. Last currency we'll look at is the Singapore dollar yen. Okay, Singapore dollar yen, we're seeing, again, look at the movement to the downside. Look at what's happened in February. This has moved 100, 200, 300, 400, 500, 600 pips pretty much in in the month of February. It's trading below the low of last year, so we could see good weakness to the downside. Now, I know certain broker accounts, they don't trade Singapore dollar currencies anymore, but I know, for example, FXCM, they removed all their Singapore dollar currencies, which is a shame, because the Singapore dollar trends very well. If you actually look at the Singapore dollar itself, so if you look at the Singapore dollar itself, you can see how well it trends very nicely. I have several broker accounts, so I'm not restricted to just one broker. I think I have 10 different trading accounts. So I can trade this in, I think, IG, for example, they offer the Singapore dollar. So if you are using FXCM, then maybe look at other brokers to see which brokers offer the Singapore dollar currencies. And they are good currencies because they trend well. Going back to the Singapore dollar Japanese yen, price is now trading below the weekly 200 and the 50. So both are acting as resistance. And also on the daily, price is trading below the 50 and below the 200. It's also trading below the round number 80. So we're now looking for a potential entry point. So the next breakout, pullback, however you want to trade this, that will be your next entry point according to your own trading plan. But the Singapore dollar Japanese yen, again, a very good currency looking to set up, and you can see how it's moving. It's moving very significantly. Again, came to 50 moving average, indecision, a pop and drop, if you like. It didn't come bang on. But remember, these aren't hard levels. They are zonal areas. Price will usually come around these levels and then reverse back in the direction of the trend. Okay, guys, I think that is pretty much it for today. Are there any final questions before I call time on today's webinar, please? Money is an attachment, a cause of suffering. Yeah, exactly. Don't be attached to the money. Be attached to the process. All too often, when people first come to trading, they focus on the money. And they focus on the money without really having a plan on how to get that money. And that's really a doomed approach. How are you going to make riches? How are you going to generate wealth? Anyone can go into the market and scalp for a few pips and make a bit of money. Anyone can do that. The problem with that is that you'll have good days and you'll have bad days. There's no real sort of skill to it. It's just a lot of guesswork. But to make consistent wealth, to make consistent growth, that is a real art. Okay, and that really requires understanding. Mohit, Zaheer, please give some tips on managing a watch list. I believe I've done a scope on that, a periscope on how to manage a watch list. And it really comes down to doing your analysis at the weekend. How do you screen good instruments to trade? Yeah, that's a good question. I do my analysis at the weekend. So I start on Sunday, 1 hour at the weekend, and I look through the watch list and I find the best instruments. I also have good software. You can see the software that I'm using. I don't use free software like, I don't know, MetaTrader. You know, a lot of people use free software. They don't want to invest into trading. They think that free software is going to do all the work for you. I mean, I have a support and resistance tool, which you guys can see automatically updates itself. So if I go to the Aussie dollar, Japanese yen, the support and resistance is automatically updating itself. Whereas people who use free software, you are drawing these support and resistance manually by hand. How long does that take? That's a never-ending process. Whereas if you've got software, what takes people hours takes me seconds. So good software is essential. In addition to that, I have a scanner. So I have an inbuilt scanner into the software that will scan the market for me. So I can scan for certain criteria. When it comes to the stock market, I use MetaStock. I mean, there's 12,000 stocks out there, guys. How are you going to trade the stocks if you don't have an understanding of where the money is? What do? People go to Yahoo Finance or some website like that, and then they look on there to see where the opportunities are. When in fact, if you have the right software, you can find them yourself. You know, I've shown these stocks before. There's Marriott. That's a stock that I traded from around 40 all the way to $80. It doubled in price over a year. Delta Airlines, another very significant stock. Southwest Airlines, another run. KR, Kroger. We don't have this grocery store here in the UK, but I think you guys in America, you'll be familiar with Kroger, right? So you need to know where the tradable stocks are by having good software. What is the general criteria for scanning instruments? Yeah, that I cannot share with you, Mohit. If you want to know that kind of information, that really requires understanding. And, you know, I have to be respectful of the people in the community, of the dynamic trader community, who have paid for that kind of information. So I cannot share that kind of information with you. I believe we've had a conversation before. So, you know, if you want to take it further regarding joining the community, then by all means, you know, get in contact with me. You can start with the apprentice. Okay, guys, it's now 3. It's almost 1:45. I'm going to call time on the webinar. I think my charts have come back. SW, I think you can see my charts again. Did you not see the stocks? Could you give me a quick yes or no if you saw the stocks that I shared? You're welcome, Mohit. No problem. Okay, so you can see right here, KR. I'll just give it a quick example. There's KR in terms of a recent stock that we traded. Okay, guys, right. I'm going to call time on the webinar today. Thank you all very much for your time today. If you, okay, SW, right. Okay, I'll quickly show you the stocks. So there's Marriott. Excuse me. There's Marriott. There's Delta Airlines. And this is a monthly chart, guys. It's not like a 5-minute chart or something. This is a monthly chart. So this movement is happening over a significant period of time. There's Delta Airlines. There's Southwest Airlines. There's Disney. See, the thing about trading is this. When the markets are in a bull run, anyone can seem to make money because the markets are in a bull run. And that then gives people the false confidence that they know what they're doing. It's when price starts going through these choppy periods that really starts testing people. And a lot of the times, people will have long positions open. And when the markets are going on against them, they hold their long positions. When in fact, when the markets start going down, this is where you exit your long positions and you start looking for opportunities for shorting positions. You know, if you look at a stock we recently went short on, JOY, there's a shorting opportunity. Okay, so this really comes down to understanding good software. Trading is not just a matter of getting in, getting out, and hoping for the best. It isn't. It's an art. It requires knowledge. It requires understanding. It requires, it's a real process. Okay, guys, so I'm going to finish up quickly on just sharing some of my social media links. I'm just going to share my screen with you guys. Okay, so here is the Apprentice, which, by the way, is only £99. I know if you're here in the UK, it'll be £99 plus VAT. If you're out in the US or out of the EU, then it's only £99 for the month. And with that, you get training, live training, weekly webinars, part of a community, access to some of our software. You get some stocks given to you as well. There's a whole lot of goodies that goes into the £99 apprentice training. So I've just set the link there, so please have a look at it. If you are on Twitter, I highly recommend following me on Twitter, guys. So please go to, just bring it up. Please follow me, which is at Zaheer Anwari. Okay, that's my name. Please follow me on at Zaheer Anwari. And also please follow at Dynamic Trader. So I'm a member of the Dynamic Trader community. So please follow at Dynamic Trader. I'm doing Periscopes on a daily basis. So if you haven't downloaded the Periscope app, please download the Periscope app. You can see here, I did a Periscope earlier at 3 p.m. It's generally 4 p.m. GMT. And I talk about trading. Today I talked about breakouts. Yesterday I talked about how I traded the pound Japanese yen. I've talked about moving averages, how to use them. I've talked about candlesticks, chart patterns. I talk about all the various elements of trading, and this is live. These are 20-minute Periscopes that are live streaming over the Periscope app. So if you don't have it, Periscope is the way forward for businesses, guys, definitely. It's owned by Twitter, so you need to have a Twitter account to log in, and it's definitely the way forward when it comes to promoting your business. If you guys are business owners, try and figure out how to use Periscope in your business and do live streaming. It's definitely the way forward. I'm doing it every day at 4 p.m. GMT. If you're not following me on Instagram, guys, then please follow me on Instagram, fx.mental. Okay, I've got almost 40,000 followers, and this is in about 7 or 8 months. So my page is really growing, and that's organic. There's no list buying or anything like that. So that's all organic growth. Okay, guys, that is it for today. I'm just going to see if there are any final questions. No, there aren't. Okay, thank you all very much for your time today. Adinda, thank you very much for administrating as always. And yeah, have a good morning, afternoon, evening, wherever you are in the world, guys, and see you next Wednesday. By the way, sorry, I should mention that I'm doing another live analysis at 6 p.m. GMT. So in an hour and 10 minutes, if you keep your eye out on social media, I'll be sending out a registration link for you to join in. Okay, guys, take care. See you later. Thank you, guys. Bye.